One of the most misunderstood steps of strategic planning relates to key objectives for the upcoming year. Good morning, everyone, and welcome to Monday Mentor. Today is November 11th, 2013. From the point of having core values, vision, and mission, the next progression is to define the key objectives for the upcoming year. As discussed in our very first look at strategic planning, you will need to have a good idea where you are at currently and some information about global performance history. Your key objectives are those targets in critical areas in which you will focus effort in the coming year. You should focus on between 3 and 5 key objectives, and they should generally relate to service level, gross income, efficiency, productivity, team member satisfaction, and quality. Regardless of industry or organizational type, these are the most commonly measured key objectives. First, a couple of baseline concepts related to objectives. All key objectives must be measurable and quantifiable. It is not enough to say improve service levels. It must be stated in the form of improved guest satisfaction to 98% from the prior year. Lack of measurability will kill any attempt to make key objectives meaningful and will leave interpretation up to each individual or each department looking at that objective. Stating objectives in the form of a comparison to prior years is also powerful and demonstrate a degree of reasonableness from the prior period. It also shows clearly that the objective being stated has not been arrived upon arbitrarily. The final baseline concept related to key objectives is relatability. This simply means the ability to make it relevant to line-level team members. Can team members contribute to service levels? Can they contribute to gross sales? This concept will become more and more important as we progress into talent management as it relates to strategic planning. Let's take a short look at each of these major objective areas. First, with service. Customer service as a driver of monetary results will often be listed as a first objective. To be measurable, this objective should reference survey results or some other quantifiable measurement tool. This objective is the one that is most influenced by the widest range of team members and through the widest amount of behaviors and job functions. The next objective to look at individually is gross sales or gross revenue. This is used because line-level team members, supervisors, and most mid-managers have very little influence over net income. Many organizations book expenses and items to create a positive tax position that those line-level team members have no influence on. Team members cannot influence that, but they can work hard to generate sales and revenue and referral sources. Productivity is also another objective that can be contributed and influenced by a great breadth of team members. Each defining productivity a bit differently can not only contribute but challenge existing levels of their own productivity. In a week or so, we're going to talk about some key analytics, but this is a great category to use efficiency ratios to measure this objective. Quality is another important, widely influenced objective. Each team member can contribute to quality efforts. The rub with quality is the measurability involved. The best way to measure quality is through either a quality ratio or exception ratio that measures non-standard quality to overall quality or overall production. The reason the ratio is so important is because it compares non-satisfactory results to overall production and not just focusing on the raw number of exceptions or returns. Well, that was quite enough for today. Take care and have a great week, everyone.